Thanks for joining us. I'm Marlon Bowling with a look at our ag trade. And we talked earlier about the fact that we have this virtual wheat tour going on this year in Kansas and surrounding areas. They can't do the actual physical wheat tour because of spacing restrictions and all that nowadays. So they're doing one virtually by some of the key players that have been on the tour in the past, and they're just kind of driving around and getting their own survey results and posting photos and videos and taking measurements and that sort of thing. There was one posting a little bit ago I wanted to pass along and share with everybody. For those of you on the radio, I'll read what this is. It's a post with a photo looking down from above onto the ground through the standing wheat crop, and you can tell it's a pretty thin stand. And a lot of bare ground visible looking directly from the top here. And it's from Jean Falk Jones. And she says, at least with thin and short wheat, it's easy to watch for snakes. Well, there is one side benefit, if you will, to the thin wheat stands out there this year on the hashtag WheatTour20. That's where we're finding all these posts of the folks out there that are touring the wheat fields. Again, just to reiterate that they have so far in central and north central and northwestern Kansas been finding drought stress. They've been finding signs of some stripe rust out there. They've been finding thin stands, of course. And in cases like that picture we were just showing, stunted wheat, where the wheat is very short in western Kansas. I've been reading some reports where because of the stunted nature of the wheat, it's trying to head when it's very short, and a lot of times that doesn't lead to much yield potential. So that is a concern, and that is some of the latest that we have seen coming out of that virtual wheat tour this year. So far, the estimates for yield have been running anywhere from about 41 to 51 bushels an acre, depending on what part of the state they have been in. Nebraska had an estimate of 50.88 bushels an acre on their version of their wheat tour. I want to take a look at what's going on in our markets. Let's go to the board and take a look at our corn prices right now to get you updated. We have been softer today. We have July corn down 3. We're at 3.18 1/4. In the soybean market so far today, we have that July contract 2 3/4 higher at 8.45 1/4. However, that is about 4 cents off of its earlier high. In the wheat market here, we are higher with July Chicago wheat gaining 3.5 cents. We're trading at 5.02 1/4 right now. In the Kansas City trade, we have July 2 1/4 higher at 4.43 3/4. And if you look at Minneapolis wheat, much bigger gains here. July 7.5 higher at 5.15 3/4. That's the one where they normally would have 80% of it planted by now, and as of Sunday, they only have 60% in the ground. Brian Hoops joins us now. He's with Midwest Market Solutions in Springfield, Missouri. So kind of a tentative start here in the corn market today. Everything else a little bit higher. Just kind of a meandering market, if you will, here today. Brian, what's moving it?
Well, the forecast is going to be beneficial, I think, for this corn market and kind of keeping a lid on rally attempts. We saw a bounce yesterday that failed as some ethanol plants in the western corn belt have come back online. That tightened the basis levels up in the western belt, but I think we're going to see that back off now as there was some producers selling. So corn market kind of just trading in a range in here, and soybeans finding a little support from rumors that China is going to be back buying U.S. soybeans. We've heard 2 to 3 cargoes that they've purchased, but limiting the advances is just really the lack of any confirmation of those sales made to China. So we're searching for that fundamental news, that information, and having a hard time finding it. With the weather forecast turning warmer into the end of the week, that's exactly what the crop needs, and that should be beneficial, and I think really keep a lid on rally attempts for both the corn and the soybean markets.
Brian, I just got some brand new ethanol production estimates from this past week in the U.S., and we'll take a break right here. We'll come back and we'll see what the numbers hold, and then we'll take a look at this livestock trade as well after this. I want to check out the crude oil trade. Let's take a look at what's going on there. And currently in the crude oil market today, we have gains. It is showing gains of $1.30 at 33.26. Let's jump over to our livestock trade. Oh, before we do that, I wanted to point out the new ethanol numbers. And on the ethanol production, we had production last week at 663,000 barrels. and that was up 46,000 barrels from what we had last week. The 4-week average increased by 25,000 barrels to 604,000. And the stocks went down to 23.6 million. That was a decrease of 600,000 barrels last week. Meanwhile, if we look at our live cattle trade today, we currently have the live cattle showing July $1.30. Excuse me. Let's try this again. That obviously is left over from the crude trade. Let's try the live cattle board here again. There it goes. We have the June contract 47 lower at 98.30. We have the August contract 75 lower at 98.32. Now let's take a look at our feeder cattle market, and on the feeders we have the May now down 85 at 126.57 and August down 80 at 131.12. And let's check out the lean hogs. Remember, the cattle actually opened higher this morning. The lean hogs are all lower. June down 65 at 56 bucks. July down 57 at 55.70. Brian Hoops rejoins us. So why did everything turn lower after we opened higher this morning on the cattle?
I think we got the bump in the cattle, Marlin, from the stock market being higher overnight, and we're kind of waiting for this Fed Cattle Exchange auction to be held. There's about 2,800 head listed for sale this morning. That'll give us a little bit better tone where some of the packers are at, but it's going to be hard, I think, really to sustain rallies in the cattle market. We're going to back up cattle again this week, probably about another 100,000 head. Industry estimates looking for slaughter at 525,000 head. So we really need to be up around 625, 650 just to make a dent in the big supply numbers that we have. And those cattle are gaining weight each day, growing and adding weights, carcass weights, and that's going to be a huge supply issue for these summer months contracts to try and work through.
All right, does bear watching, and keep in mind all these big drops that we had in the beef cutouts and pork cutouts will get new updates at 11 o'clock Central Time today. Janet, back to you.